Good morning, everyone. Welcome back. I'm your host, Rocio Luna. It is Wednesday, the 20th of May, 2026, and I believe that half the year is already done. And today we have a very special guest, Mr. Mason Brady. And then I'm sure majority of you guys already follow him. He has and is always posting amazing things on how to be more profitable, grow your business. And today we are going to learn about why operations is important for your business. So I'm going to let Mr. Mason introduce himself to the guests. Tell us what you do, who you are.
Yeah, thank you, Rocio, for having me on today. That just appreciate having our friendship, and so thank you for this. So the audience name is Mason Brady, President Brady CFO. We're a fractional CFO firm, and what we do is we provide fractional controller and fractional CFO services to growing construction businesses. So for a lot of clients, a lot of our clients are ranging between 10 to 100 million. They need better accounting and finance resources. They need better financial strategy. It's just they can't necessarily afford it full time. So that's where we come in with fractional resources.
Awesome. And I also do know that are you nationwide or is there specific regions that you focus on?
No, we serve clients all over. We happen to have quite a few clients in California and Texas, only because I'm originally from California, moved to Texas a couple years back. So California, still like I still consider it home where Rocio lives, right? That yeah, it's still a beautiful state. And so yeah, we have clients all over though. We have clients ranging all the way up to New York, so nationwide. Before I forget too, because you kind of mentioned it, we are posting regularly on LinkedIn. For the audience, I don't want to forget this. We have a podcast called Built to Scale that is focused on financial management best practices for construction business owners. And so, if you want to, figure out some good financial strategies for your construction business, listen into that.
Yeah, and you provide tons of knowledge, always changing it. And you're also very active here in conferences. So I know you visit North Cal a lot. So for the farmers out there in agriculture, you guys are out, Mason, super active when it comes to conferences with agriculture. So, Mr. Mason, today we're going to dive into a very important topic, which is operations, what grows our business.
Yep.
And can you tell us why operations is, very important?
Well, I mean, it's how you deliver your goods and services, right? That, I mean, you could sell all day, and it's important to be able to sell well, but you have to be able to deliver. And if you can't, whether that be a good product or a service, you're gonna have really unhappy customers, and you're not going to go very far. And so you want repeat sales. That's the key of it. Is not just one sale. You want to, as soon as you make that first sale, you want to be thinking, how do I make the next one? And it's really important that you maintain those clients or those customers as well, because it's a lot easier to keep a customer happy than it is to go get a new customer. So
Yes.
operations are super important. Yep.
Yeah, and it comes back to, operations and systems. So, I mean, with your experience, when do you when do you at what point in the growth do you see a business really needing to have an operations person? Because as small business owners like me myself, when you first start your business, you're running everything. I mean, you're doing marketing, you're doing the sales, you're doing invoicing. And, as you start to scale and be able to bring in people, especially small business owners, we fall back into us doing a lot of it ourselves.
Yep. Yep. I would say, I mean, I can't tell you a perfect timeline like, oh, you start your business in 6 months. You have to go get your operations higher. I would just say that it is incredibly important to get a person full time in that role that can take a lot of admin and operations off of your plate. And I realize that for a lot of businesses, especially if they're starting themselves, you may have built out your pricing and your margins that you don't really have room. And I would begin to beg the question, can you potentially get outside financing? Could you potentially get a business loan, something of the sort that can help cover a period that if you bet on yourself to go get new sales and you had a clear sales strategy that you could cover the cost of that operations manager with you going out to market and go selling, you should probably take that bet. It's not going to necessarily always work out as people want, but the problem is you're going to burn yourself out otherwise. That it like there's a lot of science that says that literally people like functionally can only handle 2 or 3 domains in a job. And so, if you're trying to do everything in the business, you're just going to burn yourself out. And that's not a fun place to be either. And so, really, you want to try to get that operations person, especially that head of operations, as quickly as possible. And for your business, that might not look like an operations director. That might be a really amazing executive assistant, right? Like an absolute killer chief of staff or something that can come in and just take a million things off of your plate that, will just come and pick things apart and take it off your plate. But I would say the sooner that you can make that once you're starting to feel like those bottlenecks are hitting and you can't service any more clients, you need to figure out that roadmap to hiring that operations person and then figure out a way that you sell to go cover their cost and you have a clear runway and a roadmap to do that.
Yeah, and you just mentioned a key word, which is executive assistant. Man, I is you being an owner as well. It's so hard for us to be in so many places,
Yep.
and just having someone as a backup, someone to be there forefront and be your eyes and represent you is it's so important. And I think sometimes us as entrepreneurs, we might fall back into doing it ourselves, maybe because we haven't had the right staff, or we've gone kind of like through turmoil and hiring and firing. And I speak to dozens of business owners, and I feel like the hiring process is probably everybody's like pain point and
Yep.
something that people don't really like to deal with.
Yeah. No, I agree. At the same time, though, there's this really great quote, and I recommend to anybody that would consider the value of a really good executive assistant. Um, you have to still set up systems with that executive assistant. Like, you can't expect, like, at the end of the day, you want to hire good people that can come in and help take things off of your plate. But if you, as a leader of a business, are expecting that, okay, you don't have any systems to onboard that person and set expectations and manage them, if you're thinking that you can get away with not having any of that and that person's just supposed to come in and take things over and that is just supposed to all of a sudden make your life better, I think you're in for a rude awakening. The scale at how much you have to do that is a different story. That if you've hired the right person, you shouldn't have to do significant amounts of hand holding of that team member. But it is important to know that you do have to create some systems and some onboarding for that team member to help them be successful. But for those that are considering an assistant, I think it's a wonderful investment. I have a really wonderful assistant currently. Her name is Carolina. Manages my inbox. 90% of the emails that are responded to that people get replies from are not me. It's her. She coordinates my calendar, has first entry point into my calendar. I can't get something on my calendar unless it goes through her. Give her a lot of autonomy and control, and it keeps a lot of junk off my plate. But I really recommend to people, if they're really considering an assistant hire, there's a really great book out there called Buy Back Your Time. And it's written by Dan Martell. And he talks about how do you properly onboard an executive assistant and like what should like a weekly meeting with them look like to have the most success with an executive assistant. And he's got a phrase in there that basically 80%, if a task is done 80% of the way that you would have done it, that's 100% awesome. And I think that's the thing, is that people have to also understand and live with the fact that, what probably made you want to go venture out and do a business is you're a go-getter. Like, you get stuff done. Like, you get stuff done really, really well, and people trust you. At the same time, you also have to let go of the idea that people are going to do it exactly as you would have done it. It's going to be impossible to expect that. In some instances, they may do it better or they may bring other flavors to it, but they may not do it exactly as you do it. And you also have to get comfortable with that, right? That's kind of a hard issue you have to work through. But yeah, really recommend a good executive assistant for new business owners. And yeah, I would definitely read that book ahead of time, because it will make sure that you nail your executive assistant hire and onboard them and get systems set up correctly.
Yeah. And what's the name of the book again?
Buy Back Your Time.
Okay, Buy Back Your Time. I'm
Yep,
going to
by
read it.
Dan Martell. Yep.
Okay.
It's a really good book. Yep.
And then, so Mason, let's say there's a company that is like, hey, you know what? I do need one. I'm backed up, but my systems and processes are not the best. Like, I have a one pager of what to do, but I don't have, step by step of how someone should do their job properly. Is that something you guide them with or you advise?
I wouldn't say that that's necessarily what we guide or advise people on. Kind of in our fractional CFO and fractional controller services, we're pretty dominant in accounting and finance focus. But um, I would say that if somebody's looking for that executive assistant hire for the first time, honestly, I think a lot of AI tools are underutilized. Like if I could be totally
Hmm.
honest, Claude and some of the other AI tools out there, they're thinking tools. That one of the best ways that you can use them is to throw something at them like, hey, what are the things that I should consider in regards to properly onboarding a new team member? Like, this is my first ever team member, this is my first ever assistant. How should I set this up? What's a roadmap that you think are the best things that I should consider? What should I do day one? Have them give you suggestions and kind of build out a framework that you can then go review and spend some time in. That what else can I fill in here? But I think being honest with, a new team member like an assistant, that part of the expectation is that they bring some order into your life, right? That they do need to bring the ability to create systems on their own and to help you. But I think being open and honest that you're missing a lot of those pieces, just be willing to work with them in the process. But I think if you're just expecting that all of a sudden day one you hire them, you have a meeting with them, and then they know how to do everything, no, you're gonna need a weekly meeting with them at minimum. You're going to need to have some, and by systems, I mean, it could just be that you have a weekly meeting and this is how you do the meeting. Like every Monday, you do it this time. This is what you intend to talk about. You intend to check progress on a couple of these projects. Like this is what you do. That's a system. And I think you need some little basic elements of that, because otherwise, if you hire somebody and then all of a sudden send them out on their own and they're supposed to get it all done right, like the way that you would have expected, you're going to be in a world of pain. The expectations are going to be misaligned. That Rosie, like you're married, like how often do husband and wives like miscommunicate all the time and misread each other,
All
right? And yet,
the time. That's why I
yeah,
say
and
women are, what's that? I forget which planet we're from, but we're completely two different planets. And
oh
women
yeah,
communicate, differently than men communicate.
oh yeah, and so I mean, you could have spouses that live with each other, go to, like you can have spouses that have spent 20 years together that still have communication problems. How would you expect, you to be successful with a new team member unless you had somewhat of an onboarding plan? And I mean, again, that book is very helpful, but I would honestly throw it at Claude, and just go into Claude and say, hey, how would I develop an onboarding plan for an executive assistant? This is my role at this company. Like I'd write out the prompt. This is what I do. This is my website. This is what I'm about. These are the problems I'm facing. This is what I need him to take over. Can you help me write a job description as well as an onboarding plan, et cetera, et cetera? I think you'd be surprised what Claude would come back with. And then you can even kind of edit it from there. I think it'd be super helpful.
Yeah. And that's kind of the beauty. That's it. We're in this stage right now where there's people that are adopting AI. And then there's people that are like, oh my God, I've been hearing, AI and all these things, but I still haven't dove into it, or I know the bare minimum.
Yep.
And but it's also kind of scary because look how fast we're, integrating, or how fast these tools are adopting.
Yep.
So I do highly encourage people, if you haven't explored or done, um, use any of the AI tools, do use it. There's a lot of YouTube videos, there's a lot of how-tos, and it is very amazing what AI could do with you, for you within minutes. I wouldn't obviously be fully dependent on it, because you still have to think about it and, use your processes. But, with little things like that in scripting and having written plans out, I do agree with you on that,
Yeah,
Mason.
I would agree.
So
Yeah.
with your company, you were mentioning how you really, just concentrate, really focus on growing and making sure that companies are profitable. For those that don't know, can you go back and explain how you're able to do that through your company?
Yeah. I would say for businesses ranging between roughly about 10 to 25 million, especially of the industry segments we serve. So We serve construction clients, we serve food and ag clients. We can serve industries outside that. We just happen to have a really strong specialty in those areas. Like those are what we're known for. Those are what we hire for. Those are what we build our systems around. Tend to be low margin businesses that face a lot of volatility. And so to that point, businesses between 10 to 25 million, we find, they could really use the help of a really, really strong controller, or what we call a fractional controller. Fractional just meaning part-time. It's not necessarily that they need a full-time team member. They need somebody part-time. And where that kind of fills in is that they may have somebody full-time doing day-to-day accounting. The problem is that as you scale up, say for instance, I just met with the prospect yesterday, just under 20 million, general contractor doing some self-performed services. The problem is they completely lack the visibility in regards to which segments of their business are making money. They have a GC portion of their business. They do some self-performed work where they do garage door installation as well as some other things. They lack the visibility in regards to, hey, what's actually making money here? That, what's working or not. And so the reality is you need really, really good accounting with really good job costing. And it's not just a matter of coding transactions. It's a matter of saying, hey, this admin person's time, how much of that should be split towards this division versus that division? Like, what's a fair allocation here? And then coming up with a standardized system to where those payroll splits happen every time, right? Like it begins to get into the weeds. Our controllers, they focus on providing really top-notch accounting, whether it be for one entity or if a business owner has multiple entities, they'll consolidate them all up. They are focused on providing primo, absolute great accounting, providing the internal data that helps business owners be successful and know whether their jobs are making money or what revenue segments making money, et cetera. Then beyond that, we provide what are called fractional CFO services, where we work with the controller to actually make sure that we have that financial data, that the books are being closed, that all the data is being categorized correctly, et cetera, that everything's in the system, that then we can extrapolate that data and be able to forecast it out and be able to make business plans with it. And that's when, some of our clients are coming to us and saying, I want to figure out how to buy another business, or it may be a good tax strategy to go buy another business, right? Or, I need to figure out how to save money on taxes. And I'm not talking, Rocio, like, oh, I need to save 20 or 50,000 on taxes. I'm talking, we've helped some of our clients defer as much as $3 million worth of taxes in 1 year, like an actual $3 million tax liability in 1 year. And
Wow.
how do I defer this? And when you defer those taxes, you get to keep that liquidity back in your business and you can reinvest it in other areas, or you can reinvest it in potential new businesses, right? Like you can build an empire. Whatever the case is you need a consolidated financial plan. That's where our CFO services come in. So a lot of clients, as they grow, they can start with our controller services and then they kind of migrate up towards our CFO services ultimately. Does that make sense?
Yeah, no, most definitely. You talk about taxes. I mean, tax strategy. I feel like that's, um, anyone you ask that question to anybody, hey, do you want to reduce your taxes? You were
Oh,
going to
yeah.
get a yes on that. But I
Yep.
think sometimes people have the concept that, oh, well, I don't want to buy a property because I think what people see and do, they're like, oh, well, I don't, really want to have a property or do that. And they don't really know much ways of reducing their taxes. So that's a great, what you're providing is huge.
Yeah. I mean, I would say, one of the greatest deferral strategies is going and buying a piece of property and depreciating it, right? I would definitely say that the US tax system was built to incentivize small businesses and to incentivize real estate developers, whether the real estate is farmland or not. It was built to incentivize people to go buy land, and to move up and increase land prices. Like our economy is built on that premise, and so there is an element that some of the strongest tax strategies, are via that method, but there's alternate things that you should be talking about. It's just, you need a really consolidated plan. I think the challenge that we see with a lot of business owners is that they segment their business from their personal activities. And I don't think that you should be thinking, especially about like a CFO, like we have to have the purview into it all. Like we have to have an understanding of every little entity that you have out there, every little hustle or little business that you have out there, every little real estate holding. Part of it is it's all used as collateral whenever we get financing for a new project, but we have to have a purview into it all and understand it all, because in the US tax system, you have your corporate tax return, but really most entities are set up as pass-through entities, meaning they're not, even though they file a corporate tax return, you don't pay corporate taxes. Like you don't pay taxes at the corporate level on a federal basis. That gets passed down to your personal income tax return, which consolidates everything. So this little real estate holding over here, this business over here, this business over here, it all flows and consolidates into one part. And if you have your accounting and finance team only focus on this little business segment and you're not considering all this other stuff, you could be completely blind. Like you could have a total lack of visibility in regards to a big looming tax bill that's coming that we could have helped you avoid. And so it's so important that we get the clear picture of everything that's going on.
And that's 100%. You're right about that. And then let's see, like for 'cause our audience is construction and staffing. What's one thing that you see construction companies miss when it comes to this?
Yeah. One of the big opportunities is the ability, especially there are thresholds. So there's many tax levers you can pull, but one of the big ones that I think a lot of contractors are unaware of is that, so a lot of people are familiar that you can file your taxes either on a cash or accrual basis. And
Mhm.
if you hit a 3-year average of a particular revenue limit, and I don't know what the IRS, figure is right now, it's roughly about 30 million, but I'd have to go look up that number. But the idea is that if you have a rough average of, roughly about above 30 million in sales every year or gross receipts, you have to file on accrual basis. Now, again, go talk with your CPA about what that exact number is, but that's the general rule of thumb. Below that, you have a lot of options. And I should say construction businesses especially have a lot of options. So most people are familiar that you can file your taxes on accrual or cash basis. But with construction, you can do, like, especially if you're doing job costing and WIP reporting, you can do percentage of completion, methodologies. Like there's multiple methodologies in regards to how you can show your cash receipts and how you can show your expenses, because that's really the key of it, is that what's the timing of your revenue and expenses. So let me provide an example. On accrual basis, basically you're going to show your revenue when you earned it, meaning that if you went and worked on a job, you're going to have to show the revenue in the same period of when you worked on the job. Alternatively, on cash basis, if you spent your payroll and you worked on the job, but you didn't collect the bill from the client until the next year, well, your revenue's in the next year, but your expenses in this year. They're not in the same period. And so sometimes that can be beneficial from a tax basis, because if you don't have revenue and you have the expenses, you could have net losses, or you could have very low net income ultimately accumulated over the course of a year. And so that's a way that you can lower your tax bill. The thing is, in construction, you have even more methodologies under like percentage of completion, like how you do your WIP reporting. Like you have options that other people don't have. And I really want, especially contractors that are considering, like, as they grow up, like, should I do job costing? Should I do WIP reporting? It gives you flexibility with your taxes that you wouldn't have otherwise. And so the answer to me is yes, you should, especially dependent upon the job profile. But I guess what I'm trying to highlight, Rocio, is that construction businesses especially have options. I can't always say whether those options are going to produce something so much better than if they didn't have those options, but they have options that other people don't have, is what I'm saying.
Yeah, and you know what? I'm glad you bring that up, because I help contractors with the bond, but getting bonds and payment performance bonds. And one thing I do see there, and because I'm not a CPA and I'm an accountant, and so like when we're talking about some of the things, it goes over my head as well. But I do see that they have sometimes struggle because their net, they might have not gotten paid that year for that, and then that's, I think that's when you start to realize, hey, I need to strategize. It's a little different because it gets a little hard to show the bank like, yeah, we're profitable, but like our net income isn't showing that, but our cash, right here, yeah, we are liquid, but what we're doing gross wise is not really reflecting what we have.
Yep. I think that's the key that we try to balance for our clients is I consider like our controllers and our CFOs kind of the quarterback for our clients where they're considering how do I lower my tax liability? How do I keep my bonding rep happy? And how do I keep my bank happy that both of them want to see strong financial performance? But for the IRS, for generally a lack of a better way, you want to show that you didn't make a whole lot of money, right? Legally, you want to reduce your taxable income. And so you want to reduce that taxable income, but yet at the same time, you want to present that you make as much income to the other parties, bankers and bonders or bonding reps, and even potentially investors. Like you have to show that you make money. And how do you balance all that? And there's ways to do it, but you do have to balance all that ultimately.
Yeah. I mean, it's a big thing to have all of that.
Yep. Yep. 100%.
So for the people who are watching, feel free to drop any comments. There's a little comment section on YouTube and also on LinkedIn. If you guys have any questions or concerns, oh, we do have comments. Oh, I didn't see it. Sorry. You have a comment from Maria saying, "Do you have CPA referrals?"
Yeah. Yeah. What I can do is I can reach out to Maria after this call because I probably just want to ask some questions as to, what you would be looking for in a CPA, where you're located, because some CPAs are going to have a very strong state focus as to where they operate as well as the clients that they serve. That, each state is going to have their own income tax and property tax and state and local tax rules. And so we just want to get some more information on where you're located and what you're looking for. And then, yeah, I can definitely make a referral.
Awesome. And then let me ask you, Mason, when let's say you bring on someone as a client, is that something you guys are always you review that with someone within your company, or if they have already like a CPA person they work with? Because that's actually one of the complaints I hear a lot from my end, saying like, hey, the accountant or the person I have isn't really good. Do you have any recommendations?
Yeah, it's one of the first. It's actually one of the first questions we ask is, yeah, we have to kind of come in and basically ask like, what's your relationship with your CPA? Are you satisfied or not? And what does that look like? And we want an introduction to them. Even in our services, we're going to be kind of internal focused in regards to your finances and accounting because again, we're a quarterback role that is going to work with all those third parties well. Like we're going to strategize and make everything work together. CPAs are great because they're going to know the tax law a lot better than us. I think what people underestimate is that, like the federal tax law changed when Trump came into office, and it's going to change again probably if a new administration comes in. Like it changes every few years. Each state is adding new laws regularly, but even then, the original tax code, the federal tax code, is thousands of pages deep. Um, like to know about all the tax law within from a federal basis in each state, and then even know different property tax rules, like all these different segments of tax, like it really does take a level of expertise. And so it's important that you get a really good focused CPA partner. Happy to make recommendations against that, but it's really important that you have a good partner. But yeah, I mean, I'm not going to lie. I do have a bit of a bone to pick that I do wish that there was more accountants and CPAs that were stronger, better. I think most of all, what I think people struggle with is their lack of communication or strong communication skills. That if they checked in with their clients more regularly and were more proactive about good legal strategies, about what the client should be considering and how to take advantage of how to lower their tax bill legally, and we're more proactive in that relationship, I think more like if CPAs did that, they would get way more business. But I do feel the pain that, yeah, we get the call a lot that do people, want a different CPA, but it's definitely one of the first questions because we need to work with that person, that CPA as a partner. Like we're going to be coming up with ideas, forecasting over multiple years what is possible and what we can do because your CPA may make recommendations for how to lower your tax liabilities this year. the thing is that your liability doesn't actually go away, Rocio. And what I mean by that is that if you lower it this year, say for instance, you filed your taxes on cash basis, and that revenue example that we gave to where the client pays in the next year and you have the expenses in this period, well, guess what happened? You move the revenue into next year. And so there's never really like an elimination of tax. It's just about moving it forward. Like it's a constant movement of moving that liability forward. Not escape might be the wrong word, but deferring it into a future period, deferring it, deferring it, deferring it. And so it never really goes away. And so that's the thing, is that your CPA can implement all types of tax strategies for this year, but the question becomes, well, what about next year and what about the year following? Like, given my growth plans and what I expect, that will that be an issue in the following years? And those are the things that we want to help our clients forecast and work with the CPA partner that, okay, yeah, we can implement these strategies this year, but let's talk about the bigger, grander strategies as to how do we minimize this tax liability over multiple years. Like, if we buy a piece of property, what should we take advantage of this year and take advantage of next year, et cetera, et cetera. It just, we try to view it from a more longer term perspective.
Yeah, you're 100% right, because the laws are always changing, and I even have heard from people say, "Oh yeah, well my CPA recommended, so we stay on top of our taxes to pay more in taxes every year, and just write a check to the IRS more." But I'm not a tax person, so I could be completely incorrect. This might be the right way to do it, but when it's coming, from someone that doesn't know that side, it's like, well, why? Like, you want me to pay more, give more, but what if I don't make more?
Yeah, no. Yeah, it's important because there is a concept of, you do need to make estimated tax payments, right? That, throughout the year, especially as a business owner, you're going to have to take a portion of your income and pay estimated tax payments throughout the year, through each quarter, up until you eventually file your return. And hopefully you've paid enough estimated taxes that you wouldn't have an additional tax liability due once you finally file. So it's not so much that, I think, I guess what I'm trying to say is, it's not so much that you would pay tax to avoid tax or you'd pay additional taxes. It more so has to do with, just from a timing perspective, the IRS does want you to pay taxes every quarter. I mean, just like, at the end of the day, the IRS is an Andy. Like, how would a business work if all they did was get paid one time a year, right? Like, they want to see a continuous stream of payments too. It allows them to project, it allows them to run their bureaucracy of the IRS. Any institution is going to run that way, right? And just like, any bureaucracy, even in the state of California, state of Texas, whatever, any governmental entity is going to want to receive monthly revenue coming in from the state. They're going to want a budget of not just dropping in once a year, but coming in regularly. And so, the idea is that you're going to have to pay your estimated taxes throughout the year. That as you accumulate net income, you're going to have to pay a portion of that in estimated taxes. And so that's the key thing for a lot of small business owners, is just because you show net income in your QuickBooks, just because you show that, that doesn't mean it's cash available for you to use, or that's what you can go use to fund your lifestyle. You still need to consider that of that net income, a good 20 or 30% is going to go out the door for taxes. And so you need to learn to live on about 70% of that, if even that. And so just, yeah, be careful with managing your income too, and making sure that you're saving money to pay the taxes that are coming.
Huh. Yeah, I learned that lesson when I went in first year of my business, not realizing, I was like, wait, how much tax do I have to pay? And then what else I have to pay? I mean, I made a lot of errors. I should probably do a podcast about all the errors that I did, so people don't have to redo them, and get someone that could guide you.
Yep. Lots of learning. Lots of learning.
Yeah. Mason, so we're coming up here within the 30 minutes. Is there anything you would like to tell the audience, or a takeaway for people that want to watch this on the replay?
Yeah, I would just say, you want to make sure that you're investing in the right accounting and finance resources. And I think if people are expecting, like, hey, like, as a business owner, you are going to need to educate yourself to some degree, right? About taxes, about how your accounting and finance works. Like, this is not something that you can pass off to somebody and say, you're supposed to have all the answers and just tell me what I'm supposed to do.
Yeah.
Nothing in life ever works that way. That if that's the way that you treated sales in your business, for example, that if you tried to go hire a salesperson that just you'd say, hey, you're just supposed to bring in revenue for my business, right? Like I hire you and all of a sudden it's supposed to work. You and I both know it doesn't work that way, Rocio, that you need to be checking in on that person. What are they doing? I'm not saying that, especially with the CPA relationship or a financial consultant relationship, the pricing does demand that they check in with you, et cetera, et cetera. But I don't think that you just can't put your head under the sand on any of this. Like you need to educate yourself and you need to be continuously evolving as a business owner to understand this. And so, yeah, for that instance, like, okay, how does the tax code work? Like, what is the tax structure that you do need to make your estimated tax payments? What are the options to you as a construction business owner? It's not a bad thing to go talk to multiple CPAs, try to get multiple points of input that what are some strategies that I can take advantage of. I would just recommend stay off TikTok or Instagram to get your tax strategies. But go educate yourself ultimately, like what's possible. And I would say most of all, what's possible for your industry. That I would lean into trying to get a CPA that is focused in your industry. That if you didn't have a construction focused or a dominant CPA, they may not know about all the strategies in regards to all those different basis methods of whether cash, accrual, percentage of completion, if you do job cost and WIP reporting, all this stuff. Only a very construction centric CPA is going to know that. And so ask the question, hey, how much experience do you have in these industries? Tell me what you know. Can I get some referrals from other clients? Like, do your due diligence. It's just incredibly important. But make sure that you're growing your knowledge base of accounting, finance, of at least what are the right questions to ask. You don't need to have all the answers. Like, there are going to be people that understand it better than you, but poke and beg questions. Don't take things at just face value. Try to understand things. That's the key that I would say.
Yeah, I 100% agree with you. So where can people find you and reach out to?
Yeah. So for those that are operating, owning construction businesses, check out our podcast, Built to Scale. It's on YouTube, Spotify. It's Built to Scale by Brady CFO. So again, on YouTube, Spotify, Apple Podcasts. It's on every major podcast platform. It's a video-based podcast. You can check us out there, as well as I'm very active on LinkedIn. Just look me up, Mason Brady. Otherwise, you can go to our website at bradycfo.com.
Awesome. And I'll make sure,
Yeah.
after this call, I will link Mason. Well, Mason's on the author there, but I will link in the comments his website along with the podcast so you guys could easily access it.
Awesome. Yeah. Thank you,
But
Rocio.
yeah, thank you
Appreciate
so
it.
much, Mason. I appreciate you for coming on. You always are a bundle of so much information. I feel every time we talk, I feel like I'm learning something new. And I know you are out there helping out business owners become more profitable.
Yes, absolutely. So thank you, Rocio. Really appreciate the opportunity to come on here today.
Thank you. And,
Yep.
for those that are watching, thank you so much for joining us. You could comment, reach out, and I wish everybody a great Memorial Day weekend.
Yes, absolutely. Enjoy the day. Enjoy the day off if you get it.
Yes.
Thanks, everybody.
Goodbye.